Let me now introduce the second panel, which will be discussing the role of capital markets in financing infrastructure projects. In a moment, I will introduce the panelists and, of course, the moderator. I think I can do it now. Well, so let me invite to the podium Łukasz Dziekoński, Chairman of the Board at the Marguerite Fund. Michał Lubieniecki, Vice President at Polish Investments for Developments. Minzolini, Senior Country Officer at BESI Grupo Novo Banco. Grzegorz Namiotkiewicz, Managing Partner at Clifford. Maciej, Wolański, Managing Director, Societe Generale. And the moderator will be Wojciech Hann, a partner in the Financial Advice Department at Deloitte Business Consulting. Please take your seats, gentlemen. And the floor is yours. Gentlemen, have a nice discussion.
Ladies and gentlemen, dear sirs, it's a great honor and pleasure for me to host this eminent panel today. We will be talking for approximately 50 minutes about the challenge that infrastructure investments pose to the capital markets, and possibly vice versa, the challenge that the capital markets sort of pose to the infrastructure investments and as we know them in the Polish context. I will skip the introduction of the panelists because we were already introduced, thank you very much. And I would like to focus on one introductory topic, which is related to the size of the investments expected in the Polish economy in broadly understood infrastructure, including transportation, including energy and resources, including roads and railways, and including telecommunication infrastructure. Various accounts, various forecasts foresee a 400 to 500 billion zlotys to be invested in that area until the year 2020. The real question is how much of that amount, half of which is composed of the transportation investments, both in railroads and in motorways, how much of that amount could be financed from instruments which the capital markets are offering. The hypothesis that many of us would pose immediately is a small fraction only. Why is that? And can this be changed? And is it healthy for the Polish economy? Would be the types of questions that we would like to tackle today and to answer today. My first question would go to Michał Lubieniecki, who is the Managing Director of Polskie Inwestycje Rozwojowe, Polish Development Investments, and who is at the forefront of well, fighting for and winning the healthy infrastructure investments. Michał, could you describe where we are? What's the situation? What are the biggest challenges? Is really the biggest challenge lack of funding, lack of capital market instruments, or is the biggest challenge lack of projects? Or maybe there is another biggest challenge, like a political challenge, and sort of demand for a political owner for the big project.
Okay, thank you, Wojtek. Perhaps I will do a very short introduction because that's important to describe the perspective from which I'm speaking. So, indeed, I work for Polskie Inwestycje Rozwojowe. It's a government-funded infrastructure fund, which, as some of you might know, is one of the entities responsible for implementation of Polish investments, Inwestycje Polskie program. And the aim of the program is to use the financial assets owned by the state towards financing of productive infrastructure investments. And the other more established, as we might say, because we are a fairly young entity, more established entity implementing this program is Bank Gospodarstwa Krajowego, BGK, in abbreviation, which is essentially a state development bank. So going back to where we are in development of this asset class in Poland, when we are talking about investable infrastructure projects, our mandate within the program is to provide minority equity and subordinated financing and all structures in between for investable infrastructure projects. We have been operational for about a year. We started in Q3, Q4. So indeed, we do have some significant visibility regarding this emerging asset class in Poland. One caveat which needs to be made is that our definition of infrastructure is fairly broad. These are not only narrowly defined regulated assets, monopolistic assets, but it also includes, for example, gas and oil or capital-intensive industrial infrastructure. So these are primarily all long-term capital-intensive assets, but it includes core infrastructure, obviously. And secondly, we do invest into greenfield/brownfield projects because this is our development mandate. So we do not invest into secondary assets. We do not buy existing assets without significant capex requirements. So from our perspective, we have closed a couple of months ago the first 400 million zlotys transaction for subordinated project financing of offshore oil extraction. And we're currently working on, we have advanced pipeline of a number of projects in power, transport, in PPP, which have reasonable probability to close over the next 2 quarters. So from our point of view, this visibility of investable infrastructure projects is improving. This is indeed a growing asset class in Poland. I think some of my colleagues in the panel might address it in more detail. There's also growing market in secondary market in those assets, in renewables, in telecoms, in power, which offer interesting opportunities. So I think it is, as I said before, emerging asset class. This is not mature asset class like in some markets, particularly very developed ones like Australia, Canada, or United Kingdom. But the number of available transactions and visibility is improving. I think the second point, which...
Maybe I can just jump in and ask a question. Well, presumably within this year, you may expect to close 2 or 3 transactions, maybe 3 transactions.
I said over 1-2 quarters.
Yes. Yeah. Presumably next year, when things develop, you may close another 3 transactions. But there is a visible gap between a world in which PIR is closing 3 transactions a year, which is a very good result, by the way, given the circumstances, and a world in which PIR is closing 30 transactions a year. Is the supply of projects an issue?
And where does 30 number comes from?
Well, the 30 number is basically something which would probably, I remember still the expose of Prime Minister Donald Tusk, well, more than a year and a half ago, where he was mentioning large numbers associated with PIR.
No, that's a very common mistake. The PIR was not mentioned in this expose. That was program Inwestycje Polskie, which is implemented jointly by PIR and BGK.
So let's understand what the right size of PIR is, and whether the number 3 transactions a year is the ultimate number, or whether we could push this number up.
Well, I think there are 2 factors to take into account. First is obviously the universe of investable infrastructure projects, which is driven by sponsors. Neither us nor BGK create those projects, and and we are not only investor in the infrastructure arena. We have to say it's now not our goal to push out, for example, commercial investors. It's our goal more to our goal is also to mobilize private capital to invest into this asset class. So that's the second point. What is the right scale of right size of investable infrastructure projects in Poland? I think it's a more broad question than just related to the program, to Inwestycje Polskie program, and it's more driven by whether there will be drivers which are pushing sponsors to use off-balance sheet financing, whether there would be stability of regulation which allows for it, whether, for example, the public sector would like to use more and more, for example, PPP structures, for which there are increasing prospects, slowly and gradually.
If I hear you correctly, the real issue at stake, at least from peer perspective, and I would be curious to see other perspectives from the panelists, is the lack of a sort of national uniform or PPP program that would, in a sense, generate a pipeline of projects, or which would force the municipalities and other public entities to, well, think about sort of tapping the market for such solutions. You may not necessarily subscribe to this view, but I'm trying to put it in a sharp manner.
Perhaps before other gentlemen in the panel address, I would say that PPP, I agree that there have been very few so far, and the number is increasing. We see a number of interesting PPP projects in the pipeline. But PPP is just part of the picture. If you look at the infrastructure asset class as such, as investable assets worldwide, that's what, 10–20% of that asset class. So perhaps before we start discussing PPPs specifically, I perhaps address your second question about the funding. I think it's funding for infrastructure projects in Poland is a mixed picture, because on one hand we have a lot of liquidity in the local Polish banking market, and capital markets are as good as it gets, both in terms of credit pricing and in terms of appetite for Polish assets. If you look now at where the Polish sovereign curve is, it's below some of AAA rated countries. So it shows you that this funding is available, and there are a lot of infrastructure funds looking at Poland. On the other hand, if this local liquidity dries up as we go up with the liquidity, with the complexity and duration of the financing. So there are a limited number of banks who can finance with senior debt complex project finance projects, and we've seen it in a number of cases with work. And in the end of the day, there are also, for very large projects, which will come in time, well, basically, even the largest banks can write tickets. The largest tickets which can be underwritten by local banks exceed slightly 1 billion zlotys or so. So there's an issue of concentration, and also on the equity side. There are very few. In many cases, there are very few investors who can fulfill the role of long-term equity providers in infrastructure projects, which would lock up equity for long periods without immediate cash yields. And this is actually the gap which we are working to plug.
I would propose to break for a second and turn to the next panelist, Łukasz Dziekoński. You are both director at PKO BP, but also a person who is the face of the Marguerite Fund in Poland. From your perspective, what's the situation in the infrastructure investment market? Would you agree with the fact that there are too few projects for too much money?
Thank you. I think what is the major problem with the Polish market, and generally also this is the similar situation in all of the European Union, is a lack of quality projects. Because when you look at the infrastructure sphere and the sphere of projects currently available on the market, very few of them have good characteristics that are very well fundable. Unfortunately, also what we would have discussed earlier on, so good quality PP projects, there's also a lack of them. I think it's relatively easy to find the proper capital and debt financing for good quality projects. The problem is the lack of those good projects.
Is it also an issue, just a second maybe question, follow-up, is it an issue that in many projects which are sponsored by public entities and yourself or other infrastructure funds would be seen with much cautiousness, and infrastructure funds wouldn't be sort of easily allowed as equity investors? Is that an issue, or it's an exaggeration?
Maybe it's a bit of exaggeration. I would more look into the problem as really there's this saying, there's too much money chasing too few projects. And also what I think is quite important is that if you really have a good project, it's easy to find a lot of private equity for this and private capital for those projects. I think it's not a problem of funding, and I think that also the current initiatives at the level of European Union, so the latest initiative of the new head of the Commission, Mr. Juncker, the task force on financing of Europe and probably of gathering and organizing good quality projects is a move in the right direction, and I think they address this problem.
Thanks a lot. Christian Minzolini, from the perspective of a foreigner operating in Poland and having also a broader European perspective, could you comment maybe on two things? One is the sort of present structure of the Polish bond markets and the deficiencies that you can see there. And I think a second topic would be, from your perspective, what would be the examples, sort of best practices, observations from other maybe European markets that you could easily well, supply or put in context of the Polish market?
Good morning, thank you. Well, first, before starting, I cannot resist repeating a joke that I heard this morning with my colleagues, which is, well, sorry we are doing that in English, but it seems that 98% of the persons here are Poles, and there is a Serbian lady and a Croat lady, and well, you as a French, and maybe one of my Portuguese colleagues in the audience, so we have to do it in English. Sorry, apologies, but it has to be in English, even for the majority of the people who are Poles. First, one comment about the global infrastructure financing situation. This is a comment that I took from a very interesting work which has been realized by a specialist called Thorsten Ehlers, who is working at BIS, the Bank for International Settlement, and which in August 2014, it's to say yesterday, said that the market of infrastructure financing was still dominated by equity and bank loans, first element. The second, that it was absolutely necessary to broaden the potential group of investors, second. Third, that there was a need for broader mix of product. And fourth, that it was necessary, absolutely necessary, to widespread the securitization of present bank loans in order to diversify risk. What I mean by that is, before going to the Polish situation, even in the international market, we are still fighting with a very harsh reality, which is there are major projects in terms of international infrastructure developments in the 20 years to come, and we still do not have the capacity on a global basis to understand the way we will finance it, because basically, and this is a reality we have difficulty to grasp at this point in time in Poland, the banks will have to retreat from this market, and they are today the major interventors. Why will they have to retreat? Well, this is basically related to Basel II and to the new legislation related to equity consumption from the banks, which has to be related to the relationship with the duration between asset and liability. So, first major element, we still have an enormous issue on an international basis. Second comment, and maybe it's an interesting figure to put on the table, with EU 2020, Poland will be receiving 120 billion euros to apply in infrastructure investment, well, in development investment, and 82 billion for the cohesion policy, which means that we will have around 34 billion euros to invest in transport and key network infrastructures, and around 10 billion euros in order to shift towards low carbon economy. Why those figures? Those figures to come back now to Polish reality. As my colleagues were saying, very few dedicated infrastructure fund in order to bring equity, so relatively low level in terms of capacity to bring equity on the market. And second element, which is even more important, a banking market which is still competing on the size of balance sheet, which is still considering that the major objective is to lend as much as possible. And to lend as much as possible means that at the same time, the basic instrument used in the loan market are plain vanilla or corporate loans. So there are major explanations on which we can come back with my colleagues on this situation, but this is the situation. So if we are looking at as if we were doing, having a look at the Darwin evolution, well, first you have the corporate bond market, the corporate loan market. After that, you have the more sophisticated project finance loan market. And after that, you have securitization and you have project finance bond market in order to go in the sophistication evolution of the market. We are still here in Poland at the corporate loan level with very few operations in terms of real project finance bond. And well, my friend Michał will have the capacity to remind me because my memory is really, really poor. But I have the impression that the last real important project finance we did in this country was for the A2 financing, and it was in 2010. I am sure that you will tell me that there were other operations. But of this size, as far as I remember, that was the last really important operation in the Polish market. Well, we are talking about classical project financing, okay? So what do we want? What do we want in this market? We want to accelerate this process and maybe to jump over the situation of the project finance classical loan market. Maybe it makes sense today to consider whether there is a possibility to go directly to project finance bond market. Because if you are having a look at the way the Polish bond market, the Polish market is today, you have major interveners with offers and with mutual funds. Obviously, much more with offers, which have, at the same time, the responsibility to find long-term assets in order to match their obligations, and have today a major issue with decreasing interest rate. So, well, in the best of the world, on one side you have guys who have difficulties to find yield pickup and have major amounts which are invested in classical government debt. And on the other side, you have potentially very interesting long-term project, which could be the alternative. Maybe for a first intervention, I'll remain here, and we'll talk later on about a little bit more precisely about what can be done.
Thanks a lot, Christian. My next question would go to Maciej Wolański from the perspective of Societe Generale, one of the heavyweights of European banking market. Well, would you agree with what Christian was saying? Would you like to comment on the fact that there is a visible disparity between, say, the duration of infrastructure projects, which sort of oftentimes go beyond 30 or 50 years, and the sort of easily observable fact that the duration of Polish bonds sort of rarely exceeds, well, tell me 15 years. Would you like to comment on the sort of number of ideas which I think are sparkling around, which are sort of ideas about the bond enhancement programs?
Thank you. So then maybe being a part of a French bank, then I'll just do the panel in French. Alors, on peut parler en français? No, that was a joke, because I know that many times that actually there is some French organizations, we do use French. Now, with regards to the maturities, first, I would actually like to step back a little bit, in the sense that we actually run here in Poland, together with our colleagues from infrastructure in London at Societe Generale, a pretty integrated platform. And that's why we are quite keen and involved in a number of projects in the past on the motorways, as well as on the maritime projects and another type of infrastructure investments. And you know, like the overall picture, sort of from the European side and from the global side, is the one indicated before, in the sense that if you look at the amount of the total project finance in the world, and this is about $210 billion of various facilities, the growing portion of that project finance is actually done in form of project bonds. That's about 20% now, and it was starting slowly and gradually from the year 2009. The reason for that is obviously because of the several issues that the banks are facing, and the fact that many players have retracted because of the regulatory requirements. So there is an interest on behalf of the, I would say, on one side, the banks, in order to move and to arrange actually the bonds, but on the other hand, also on the equity investors, and we do work with some here as well in the Polish market, who diligently and knowingly that it might be actually quite challenging to do present and to finance their activity on a project bond basis. They say that this is, you know, like a strategic move in order to really open new sources of finance for themselves. So I think this is something, you know, like an underlying theme. On the other side, what we see is that in Europe there were actually several initiatives in order to increase the, let's say, the interest or the appeal of these type of bonds to the investors. There are obviously the usual elements of an infrastructure project where there are more risks. There is a construction period, which usually creates, you know, like a, I would say, a significant element to be mitigated for the investors in order to be accepted. There is the very long maturity as well. Some of the project bonds that we have arranged, you know, like recently in Europe on behalf of, for example, German projects or Spanish projects, they might go as long as for 30 years, which gives a very long horizon, usually, you know, like not acceptable for the banks. And the overall payment for that infrastructure, which is also a key element in order to build a working structure. We had seen, you know, I know the message a little bit, which is going around that there is not enough projects, and on the other hand, you know, like that there is a lot of money that would be interested to get into these projects. I think, you know, like when you see, and I had read actually with interest some of the evaluations of the instruments that were launched by the European Union or by the EIB, like the LGTT, for example, that were, when these schemes, the credit enhancement schemes, were applied, they were working well. But on the other hand, there were some issues in the terms of, even for the member states, to have, you know, like sufficiently developed capacity within the countries in order to carry a number of these type of projects that could actually use these type of schemes. So, which shows that it is a work not only, you know, like from the let's say commercial side, but it's also work, I would say, from the public side in order to make sure that the various borrowers of the money or investors into the infrastructure have that type of knowledge and comfort zone in order to be able to launch these type of projects. And this is not something that happens overnight. And I presume that the success of United Kingdom in that respect shows that it's actually, I would say, a comprehensive approach that works best. But on the other hand, we also have investors which, you know, obviously not necessarily all, or the borrowers understand how the various schemes work. And that's another issue when structuring, you know, like these type of transactions, that we need to bring the two closer together, and that's apparently called financial engineering, and that also takes a number of people to agree. I think something which was very useful and is showing in number of deals actually done is this European Union Project Bond Initiative. And essentially how this mechanism works, probably many people here know, but it's a type of mezzanine or guarantee that allows basically to enhance the credit of the project company, and at the same time is usually applied for a period during the construction, and then there are some limitations after the construction. And you know, the examples, for example, of the A7 motorway project in Germany that we have arranged the financing for 750 million euros is a good example actually of the type of structure that use this type of enhancement. But then, you know, this type of enhancement is usually, you know, for, I would say, a relatively large and heavy projects, in the sense that, you know, like I was just mentioning, the level of 750 million euros is not necessarily, you know, that would be a very visible project in Poland, quite frankly, and we would probably remember it maybe for 2 or 3 or 4 years. When we see the average sort of size of a PPP project in Poland and the average size of the PPP project in the European Union, there is a difference. It's around 160 million euros for the European one, and probably much lower in terms of Polish zlotys. So I think what we need to think as well is how we're going to be using these type of schemes in order to to create and build, like credit enhancements for bonds that actually range in Poland, in the Polish capital markets, where most of the investors have the type of horizon for investment between 3 to 7 years, where the project finance techniques are not necessarily, everyday type of transactions, so they're not that well known. And this is a work which is, a work both from the banks, from the arrangers, from the advisors, but it's also work on the side of the governments and of the various entities in order to promote that type of development.
Thanks a lot. I guess that Christian would like to comment, but before I give the floor to you again, I would like to ask Grzegorz Namiotkiewicz, your position as a Warsaw partner at Clifford Chance sort of gives you the opportunity of observing both the actual projects and also maybe have a perspective on what could be done, what could be improved, what requires change, also in terms of the Polish legal framework surrounding infrastructure projects. I think PPP was mentioned here already, and I would be curious to maybe hear your comments on that. But in addition to that, I understand that the Polish bond law, the new law, could also be a topic for maybe wider advertisement, if I may say so. Comments from your side about the status and where the infrastructure market is going.
Well, thank you. Well, before you allow Christian to comment, I would sort of pick up on what Christian said. I think that the market at the moment, the corporate bond market, in terms of sort of investors, is dominated by banks. I mean, from what I understand from the figures which I have, is that over one third of non-governmental debt in Poland is bought by banks, and corporates is almost 1/3, and then investment funds and pension funds are there as well. So I think for the moment, the market in sort of corporate bonds or non-governmental bonds is dominated by banks, and that obviously means that there is a sort of specificity to that market, and there is a gap between corporate bonds and project bonds. And just there are certain features of the current corporate bond market. You see quite often underwritten bond programs, but on the other hand, you have the success of Catalyst, which sort of very much increased the volumes of the bonds of the market. You had offer or pension funds as the main drivers of the bonds deposited with the National Depository of Securities. You had, issues in PLN and with floating rate, maintenance-based covenants, and a very limited number of retail projects. We looked at 3 examples of the so-called project bonds that were done in Poland in the airport sector, and we sort of tried to see whether these are really project bonds. Is this capital market, or is it loans sort of dressed as bonds? And obviously, you have a bank syndicate, which is the arrangers. It's either a single bank or 2 arrangers. Very often underwriting, because a project would require funding over a sort of longer period, so not one-off. There will be security, so there will be obviously secured bonds. Also sponsor support, sometimes a comfort letter. maintenance-based covenants like EBITDA, net debt to EBITDA or DSCR, full information package, including all the reports and quarterly compliance certificates, no rating, limited transferability, which is interesting on the capital market, no listing on the on Catalyst, and also again some bank asks like the borrower or the issuer has to transmit some of its cash flows through such bank accounts. So for me, that obviously is an example or confirmation that these project bonds are not really capital market. And I was wondering, you know, what is the main driver for the market to develop a project on the project level? And obviously, as someone was saying before, I think Christian, that you know, obviously project bonds are a much more sophisticated instrument. So, you know, these are dynamic projects. You know, the project may evolve, may change, there may be problems, there are various risks that need to be addressed. The bondholders may need to be asked for waivers and how you achieve that. So for me, the important legal element of a project bond would be, you know, how we can lead the investors through a sort of a complicated area of the underlying project. How we ask them, you know, to take part, but then how do we get the decisions? How do we make the bondholders to adopt to the changing project? And I think we've seen a couple of examples where a bond monitor advisor was used. Well, that's something that we see not in Poland, but outside of Poland, but it could be easily be adapted. So if the bondholders are asked about, you know, a waiver or, you know, asked to take a decision, they are given some reliable information and some recommendation. You know, sometimes it's worded as a sort of negative decision. So unless they take a different view, the advisor view will be binding, or they have to vote and they have a pure discretion. But in a project where there is sort of nobody at home, there is no lead bank, there is no monoline insurer, such an institution could be quite helpful. So that's something that could be adapted on a contractual basis. What the new law, the bond law that we are waiting for, which is supposed to be adopted and start, which will come in force on the 1st of January this year or next year, will introduce a concept which is already existing, but it will be changed. That will be bondholders meeting. And that is again something that will probably help these projects to have a more stability or security, because probably each issuer is fearing the you know, one investor who can sort of pull the whole issuance. So the bondholders meeting will be an instrument to limit the right of the investors, of one investor or a small group of investors, to demand default if the situation gets worse, or that will be an instrument to get waivers or consents from the group of bondholders. So I think that will be an interesting idea, and we'll see how it develops. At the moment, a bondholders meeting as such is a contractual contraption that has been used. But now, because the law says everything that relates to a bondholders meeting has to comply with the new law, then probably the terms of the current bonds will stay the same. But if there is a program, the new bonds will need to be changed to that effect.
Thanks a lot. I would really like to sort of have a quick second round of comments. And before we hopefully give the floor to the audience and to the questions from the audience, I wanted just to drop two issues. One, well, how about the catalyst market? How do you see this? How do you see this developing? The second topic, well, do we need a sort of philosophical change in the Polish mentality, sort of a Copernican sort of revolution? And should we start teaching the public that infrastructure projects like the roads should be paid for, because the public is paying for them anyway, one way or another, from this pocket or another pocket? Should we prepare the public for more toll roads? Christian?
As I grab the mic, I take it. An act of faith. I believe in the Polish bond market. And the figures show to me that it's a little bit more than faith. Last year, 20 billion Polish złotych were issued. In the first half year of 2014, it was 18B. This shows that this market is growing. At the same time, well, we need to support this market. And I think that one of the major elements to support it is to help him build the curve of return versus risk. The major enemy today of the Polish bond market is the lack of transparency, which is the major element which is not allowing it to grow further. We have to create basis for secondary market. Without liquidity, without secondary market, there will not be the additional growth that we are expecting. First element. Second element, the Polish bond market will never be an answer to the infrastructure financing issue in Poland. It will be a marginal support, and it will be for operations which are to the size of the Polish bond market. It's to say, well, if we are talking about raising between 300 to 400 million złotych on brown operations related to energy sector, I think that the local Polish bond market has the capacity to do that. If we are talking about any kind of additional and much more important and ambitious projects, no way. The major enemy of the Polish bond market is the development, the recent development, which is really accelerating, of the Eurobond market. And the Eurobond market is the basis of a solution of part of the infrastructure financing problem in this country.
Thanks a lot. Łukasz, Dziekoński.
May I just a little bit disagree?
Okay, in a second, if I may just ask Łukasz.
Maybe I would just step out from the bond area and bond discussion and move to the second part of your question. You said about educating the people about this. I think that, first of all, we should educate also the markets because, as we discussed, really having a good PPP structure pays off. I'll take the example of the deal that we have done this year, also last year. This was the Poznań waste-to-energy facility. We did it as pure PPP with 100% off-balance sheet structure, project finance. And luckily, the authorities in Poznań were already well educated, and also the society there. And they learned that in order to have a good asset, which is off-balance sheet, you can really much easily do it. I think that this education is working because we see a pipeline of projects coming up in the waste-to-energy. So the Gdańsk, which was announced just a couple of weeks ago, and hopefully Łódź. So I think the education works out. But in order to really train the market, it has to, a lot of consistency has to be done in this way. So promoting a good structures. Also, maybe I will just jump into a bit, not the bond.
Last comment.
Okay, not the catalyst, but I think that there is also, you can use the capital markets and the stock exchange for infrastructure financing. It's not yet known or popular in this part of the region, but the so-called Yieldco model, in which you list on the secondaries ways on the infrastructure assets. And it already worked in last 2 years with nearly 9 of such listings in Europe.
Thank you very much. Maciej, Wolański.
I just wanted to say that whenever we're actually reaching a relatively large project, and at the same time we want to finance it for 20 or 30 years, and then we see the wonderful markets in euros, then we face the other thing is that when you start actually swapping the proceeds and hedging between the zlotys and the euros, it starts to be a little bit tricky. Tricky for the investors, for the project company, and what we find there is that as much long-term zlotys for an infrastructure that is also paying itself in zlotys can be found, it's actually a very useful element of the structure. So, like I would not just look at the way that, well, we have a large European markets and at the same time for bonds, and on the other hand, a relatively smaller Polish market with limitations, but actually try to develop that market as much as we can in order to be able to really finance a long-term infrastructure.
That's a very important voice. Thanks a lot. Michał, Lubieniecki, any additional comments?
Well, comment to the bond market, to the financing and education of the investor base. I would like to turn attention to one element which might seem technical, but it's very important in this business, which is the construction risk. This is something we are dealing with on a daily basis because we, by our mandate, we need to invest into capex heavy assets, and whoever ever built a house knows how difficult it is to finish that on time and on budget. And this is absolutely fundamental issue in infrastructure construction, because the project which is up and running and is de-risked, as it's called in jargon, it's completely different asset class, which is project which is entering the construction phase. And in reality, as we see it, a number of banks locally here in Poland, which are capable of dealing with such risk, able to quantify it, to deal with the documentation and the construction, is very limited. And the number of institutional investors who are capable of taking this risk and quantifying it, pricing it, I think it's even more limited. And it's also one of the key constraints for the project bond market generally across the world. There used to be institutions called monolines who took care of that risk to some extent, but they're mostly gone now. So I think that's very important thing to underline. And pragmatically, I think for most of the projects which do have construction risk, banks will, in my opinion, remain the core source of financing during construction period.
Thanks a lot. We are bitterly conscious of the fact that we are standing between yourself and the coffee break, but still there is probably time for 2 questions from the audience. If there would be any, you're more than welcome to take floor. Just please introduce yourselves when you ask question. Do I see any questions?
My name is Tom Barnhart from Business Polska. We're a media company. It may not be appropriate to this panel, but can some of you tell us about the developments of securities lending in Poland? In other words, being able to short securities, because that so far has not really been done much domestically. It has to be done outside of Poland for the most part, and that would provide journalists and other analysts with some incentive to dig deeper into some numbers of companies. Currently, that can't be done.
Thanks a lot. Before I turn to the panel, to the bankers probably, is there any other question or topic? If not, and before summarizing, Christian or
I can try
Maciej?
to take it. Well, I'm not a security lending specialist, but I certainly understand what is under this question. Basically, this is one of the major issues of the Warsaw Stock Exchange today. which is the capacity to develop a non-cash market, it's to say a derivative market. And in order to develop properly this derivative market, you need to have a proper equity lending industry. Well, you can find some small possibilities to borrow and to lend equity in this market, but this is extremely small, and it is for sure one of the issues of the development of the derivative market in Poland. I would not risk to go too much into details because, well, this is not my area of competency, but, well, we are at the place where we are working, where I am working, it's to say here in Warsaw at BESI, we are absolutely conscious that this is one of the major challenges we have in the evolution of the brokerage industry here in Poland. Either we have the capacity to develop a strong derivative market based on what you are referring to, or Warsaw Stock Exchange will have a hard time only concentrating on cash market. And well, we are trying to do necessary steps in that direction, but it's complicated. I'm not sure that I've been answering satisfactorily, but again, well, that should be much more a question to a broker panel than an infrastructure financing panel.
Thank you very much. Ladies and gentlemen, I think we have a few important takeaways from the discussion today. Certainly, we've heard about the disparity between the number of projects and the available funding, but we've heard also important caveats and important footnotes to that broad statement. I think we've heard clearly that credit enhancement is a topic for further consideration and application in the Polish market. And furthermore, we've heard that at least some of the solutions in the new Polish bond law could be a starting point for making the market more investor open, investor friendly. Last but not least, I think we are all conscious of the fact that it's a starting of a long journey, and infrastructure funding in Poland is rather at the beginning of the long journey than at the end. As Winston Churchill once said, it's not the end, it's not even the beginning of the end, it's just the end of the beginning. With that, I would like to conclude, and please join me in thanking the panelists for the excellent discussion.
Thank you very much. Thank you, gentlemen. That was the end of the second of the three scheduled panels for today. And now, as it was mentioned, I would like to invite you for a 30-minute coffee break. We are meeting here at 12:30 for the third and final panel of this conference. See you then.